The nuclear winter around real estate just got a bit longer due to the corona crisis. What does this mean for you as a tenant, a landlord, and an investor? This is a special series of Money with Monika, in which I decode policy and events around the corona crisis. I'm also taking your questions. We know that real estate has been in a slump for about 10 years. Those who bought residential real estate about a decade back, especially on a loan, have realized their losses. They are sitting on real losses today. Just as the industry was beginning to see tiny green shoots, it's got slapped by the corona crisis, and this one it's really going to hurt. Why is that? Look at us. We are all working from home. Companies who'd invested into thousands of square feet of office real estate are in the process of renegotiating their contracts and letting go of a lot of space. So, down go the prices of commercial real estate. Residential real estate is no different. There is uncertainty on jobs, on salaries, there are sectors which are bleeding. This one industry is not going to see an upswing in the near future. But every time there is a crisis, there is an opportunity lurking somewhere. And there is one entity who stands to benefit, and that is the tenant. If you are a tenant, this is what we call a tenant's market. And let's see some strategies around that. For a very particular slice of the population, the under 30 single millennial who moved from his or her hometown to a large metro, was living on rent, and has now moved back just ahead of the lockdown and is working from home, is productive, can look at an option of asking their office HR and their team leads to allow them to work from home for a full year. Look, the corona crisis is not going anywhere in a hurry. We are being told now that, the curve may have flattened, but we've got to now learn to live with the virus, and which would mean an extension of all that we've been seeing. So if you've been productive and your work has not suffered, it's a good idea to talk to your HR and ask them to allow you to work from home, from your hometown for a year. I think most of them would agree, because they're saving on the office costs, the maintenance costs, and you are being as productive as you were when you were physically in office. It's a plus for you. You're saving your entire rent, your groceries, all of that. Plus there's mom's cooking. So I don't know why anybody would not go for that. But for the older cohort, you have families, you have kids, you can't really, there is no hometown, this is your hometown, what you're going to do, but you're still on rent. It's a great time to renegotiate your contract with your tenant, with your landlord. Landlords tend to get fixed about the rents that they're getting. But this is the time when, if you look around, for lower rent, you could be getting a larger property with better amenities. So go ahead and talk to your landlord and try and get them to reduce the rent that you've been paying. But if you are the landlord, what happens to you? Well, the good old days of that 10% escalation clause burnt into the contract, hard-coded, is gone. So give up on that 10% escalation altogether. If your tenant has been good, they've been paying rent on time, they've done good to the property, offer them a 5% discount. Why wouldn't you? You want them to stay. Add up the costs of doing up the place again, the cost of the property remaining empty for maybe a few months because there's a bad job market slump out there. So it really is worth your while to get the current tenant to stay. So offer them a discount. The third, investor. Life's not been very good in the last 10 years. The sure shot thing that we were told about real estate returns has crashed. What are you going to do? Well, if we look beyond imported tiles and marble from Italy and look at hard numbers when we start investing in residential real estate, we look at a number called the rental yield. This is your annual rent minus the costs that you incur, maintenance or maybe property taxes, interest, and you divide by the capital value of the property. The number that you get is the net income that you get from making that investment. In most locations in the large metros in India, this number is between 1.5% to 2%. And we're not counting the taxes right now. it's not worth your while. The deal is not good. There is not much hope of price escalation in the real estate market. Investors today will be better off investing the money in the sovereign gold bonds offered by the government, because you are getting an interest from that, plus money in a very low cost broad market ETF or index fund. So you get your income plus you get some growth over the longer term. The corona crisis is not going anywhere in a hurry. So we may as well rethink our rules around real estate very fast. That's it from me today. Do continue to write into me at moneywithmonika@livemint.com, and I will continue to answer your questions. Well, till next time, stay healthy and stay wealthy.